Welcome to Untangle, the show where we make complex technology simple and understandable. I'm your host, Amadin Ubewe. And today we're exploring the world of Fintech. Remember when banking meant standing in line to deposit a check, or when transferring money required an actual trip to a physical bank? Those days are quickly becoming history. Our phones have become our banks, our wallets, and sometimes even our financial advisors. But how exactly does all this digital financial technology work? Is your money really secure in these apps? And what actually happens when you tap that send money button? Well, today's guest will help demystify the technology that has revolutionized how we handle our money. They'll help us understand whether fintech is truly making finance more accessible or perhaps just a traditional banking giving a modern makeover. So join us as we untangle the world of fintech. No technical expertise required. This is Untangle, and I am Amadin Ubewe. Welcome back. I've been joined now by a guest, an expert in the field. He has some experience actually behind the back end when getting these fintech apps out there for the average user like yourself or myself. He is a full stack software engineer and software architect based in Abuja, talking about David Inyang. Welcome to the program.
Thank you very much. It's nice to be on the show.
Thank you so much for coming. So, like we always do, we'll start with the basics.
Okay.
What exactly is the fintech or a fintech app, and how does it differ from the regular banking apps that exist?
Okay, so fintech, as we know, is just a short for financial technology, right? So the major difference between a fintech app and a traditional banking system is just the fact that fintech apps are built to serve and make the processes of banking easier. For example, in Nigeria now, we have several fintech apps, like let's say OPay, MoneyPoint, and the rest of them. And if you remember back then, when you're trying to open a bank account, there is a lot of process that goes into it. Talking about the KYC and the KYB and all of that. So you literally have bank staff coming to look at your house, to record the color of your gate, the color of the paint, and all of that. I remember my mom was trying to open an account once, and we had bank staff literally come to our house, recording stuff, looking at the building, looking at the fence, and taking notes down. But since the concept of fintech came up, it made it easier for people to have access to financial services. So fintech apps are not disconnected from the traditional banks because all fintech apps have an affiliation with a bank. Right. So
with a traditional bank.
Exactly. So it's either it's a traditional bank that is offering a fintech service, or it is a fintech service that is affiliated with a traditional bank. But they will always, according to CBN's regulation in Nigeria, it must always have its roots with a traditional bank.
So, what you just said now, does it imply or does it mean that all we are saying, all this evolution and all of that, still depends on the very traditional banks we're talking about? Not to bring in too many examples, but the examples you gave just now, are you saying all those banks are linked with actual banks?
Exactly.
How does that work?
Okay, so according to CBN's regulations, there are two ways this can work. So CBN has this class of licensing that people can get. So if you want to be an independent fintech organization, you need to acquire a particular kind of license, but you still have to communicate with a traditional bank. All right. So most people or most fintech organizations go directly through the traditional bank because of the cost implications of going directly through CBN. So the implication of that now is that for CBN to effectively regulate financial services, the easiest way for them to do that is regulating financial banks, the traditional banks. And once the traditional banks are effectively regulated, they would also, to a large extent, regulate financial technologies.
All right. Maybe we'll delve more into the specifics of that, because I think a question one might have is, this bank has a name. Let's say the bank's name is INP.
Okay.
And the traditional bank is called Second Bank.
Okay.
So one wonders, how did they link up? Did the one that has the fintech service and all that, did it, decide, okay, I want to start a business, and then found a traditional bank and said, you're going to host us or thereabouts?
Okay, so most traditional banks have, okay, let me just, this is what I want to say, and I might sound a bit techy, but it's the best way to explain it. All right, so there's something we called APIs, and it's short for application protocol interchange. So it's just like a connector between a traditional bank service and another service. So let's say, for example, you know how you go into a restaurant and you pick up the menu and you make an order. So the waiter takes your order, takes it out, and after a while comes back with what you ordered.
Yeah.
So let's just say that waiter is called the API, while the chef in the bank is the traditional banking service. All right, and then the menu you have is your fintech. So there is a connection between the menu and the chef through the waiter. So when you use a let's say a fintech app, for example, and you create an account, the fintech app now affiliated with a traditional bank. There's a question you asked at first.
Yes.
Sorry. All right. So I'll get to that, but let me just quickly say this. All right. So through these APIs, the fintech app connects to the banking service. Now, the way coming back to your initial question. So every bank usually has APIs. So, and they have services for fintech. So a fintech organization comes up and they say, okay, they want to build an app for so and so A, B, C, D, and they meet a particular bank to partner with the bank. So the bank now says, okay, we have this particular kind of package for this particular kind of service. So that's why you find out that it's not most fintech apps are focus on particular things. Some of them are focused on lending, some of them are focused on insurance, some of them are just focused on daily transactions and bill payments. So most banks have services tailored for particular kind of financial services. So you meet the bank that is most suited for this kind of services you're trying to render, and then you let them know, okay, they now tell you this is their package, they now give you an API and give you credentials to connect to them. So you have a primary account with them, and let's say if it's fintech service that does regular transactions like transfers and all of that. So that your account you have with traditional bank can now have what we call sub accounts. So those sub accounts are created on behalf of your own customers. So let's say I have a fintech app right now, and I performing traditional services, bank transfers, savings, and all of that. And let's say you are the bank. So I would have a major account with you. All right. Then when my customers come and sign up for my service, I will create a sub account under my main account with you for each customer. So every transaction that happens on my platform happens from the pool of cash I have with you. So let's say someone transfers money to the account I have of one of my customers. It comes into the pool of account I have with you. Then you will send me a notification that, okay, this transaction has happened on this particular account, and then I now update the user. All right. So when the user now wants to send money out to a different bank, the amount on his own sub account will reduce. One. Secondly, the amount on my main pool account with the bank also reduces. So in other words, what that happens is that the summary of the whole thing is I have a pool of money in the traditional bank, and then I now create sub accounts that leverage off that pool of money I have. So every transaction they make is just happening on my main traditional account. And then records are just updated for these other accounts.
All right, that's fair enough. Before I move to my next question about security on these fintech apps, because especially in the third world countries, what we see is that people who have a fintech app or some other bank that is not the traditional kind that uses technology, and then they'll still remain with their traditional banks. Sometimes a lot of people use these apps for day-to-day transactions, but they are scared to put anything substantial, savings, Well, savings do get put in some kind of fintech apps, but the ones used for day-to-day transactions, people feel that you shouldn't put everything there because these fintech apps, one day it could just, they could take all your money or
Yeah.
something like that. So that's the issue with security. So I'd like to know what that's about. But before that, based on what you've said so far, is this how it works globally, or are there differences across different countries?
Okay, there definitely be differences across different countries, but it's totally dependent on the regulations.
Mm,
All right. So, what I explained now is primarily obtainable here in Nigeria because of the regulations we have. So these regulations are put in place to ensure that people's money are secured.
mm,
All right. Nobody wakes up one day and disappears with all their customers' money. So, but if you look at it on a larger scale globally, it's something that is actually obtainable across several other countries as well.
All right. So the question about security.
All right. So, security is a primary concern, especially in this part of the world, and a lot goes in to ensure that people's funds are secured. All right, even from the fintech standpoint and from the traditional banking standpoint. But then, to a large extent, I won't say that it's all perfect, because at the end of the day, it depends on what security measures a particular fintech organization has implemented to ensure the safety of the finance of its customers. So, but they do their best to ensure that there's good security, there's encryption, they make sure that there is no data leakage. All right. And most importantly, they make sure that there's insurance. So that's why they usually partner with a traditional bank, because most traditional banks have insurance. There's this NDIC insurance obtainable in Nigeria for commercial banks. So that's why they usually partner with a commercial bank so that they can have that insurance as well. So there's a whole lot. It is safe. All right, it is safe. But
why is it so easy, to have one? Like, if I wanted, I could get an app right now and have an account in under 2-3 minutes.
Exactly.
But is it the same still for traditional banks?
No, it's not the same.
Why?
So,
and isn't there a risk there?
Okay, so it looks as if there should be a risk, but why it's different now is that for traditional banks, there is a level of, like we talked about licensing with CBN, and we talked about regulations. So for commercial banks, there are strict regulations that must be adhered to. All right. So it is now, looks as if a fintech app is like an extension of a commercial bank, because the organization that is coming to partner with a traditional bank has a lot of documentation to do. They will do a lot of documentation. The banks will make sure they do their KYB, scrutinize their business, check all their affiliations and all of that. So if a fintech app comes out, be sure that it has gone through a lot of scrutiny. All right. So now, when they're now creating sub-accounts, it's easier because they do not need to create sub-accounts that they don't create accounts directly with the bank since they already have one. So they're creating sub-account under their main account. So they have done all the major KYC for themselves.
Okay.
Right? So now they're making minimal KYCs for their users. So that's why the highest thing they might ask of you is your BVN. Let's say for this part of the country, or this part of the world, they ask for your BVN, your NIN, which it is assumed that those are the major forms of identification, digital identification in this part of the world. Then if they want to now go further, they can now do address verification.
All right. You were about to say you would advise based on, you didn't complete that.
All right. So I would advise that it's important to know how long a particular service has been in business before you sign up with them. And every fintech app has a track record, a performance track record. For example, a lot of people are more confident in OPay than some other fintech services because of the track record they've had over time. They've had instant deliveries of services, instant transfers and all of that. So that track record has made a lot of people depend on them because of their excellent service delivery. So if some new service comes up now, a lot of people will be skeptical about it because we don't know you. All right. So it's advised that you look at how long these players have been in the business and their track record as well.
All right, that's fair enough. Going into it. So at the end of the day, before we move on now to the next segment,
Okay.
what would you say are some misconceptions that we can quickly address and then delve into other issues that you feel people have about fintech?
Okay. One misconception that I think I've heard a lot of people have about fintech is that it is Yahoo. I don't know if other people in the world will understand what we mean by Yahoo, by Yahoo in this part of the country, right? So,
internet fraud, basically.
Yes. So, it's not actually internet fraud. All right. That is why it's important to know which service you're dealing with. Okay. So there are services out there that have maintained a steady track record of excellence, a steady track record of ensuring that customers get value for their money. So, fintech is not internet fraud, and fintech is broad. Most people feel that, let's say, cryptocurrency and all of that is fintech, but that is just a subset of the entire ecosystem called financial technology.
All right, fair enough. I think we'll end this segment on that note. We'll go on a quick break now. When we return, we'll delve into more untangling of the concept of fintech. Don't go anywhere.
Hey everyone, let's face it, our world today experiences numerous challenges. And guess what? Our community isn't off the hook either. Most of the world issues are either not talked about enough or never talked about at all. But here on Timeline, we've got you covered. We dive deep into issues that affect us every day, leaving behind footprints of wisdom, knowledge, and solutions. Think of it like a roadmap that keeps you on the track for success. So buckle up, because in this new season of Timeline, we're taking another trip through the past, the present, and navigate into a more promising future. Again, we're talking solutions, people, and let's make one thing clear. This is not your average blah, blah, blah convo. This is real talk with a side of inspiration and a sprinkle of wow. I never thought about it like that. I'm your host on this impactful ride. Together, we'll tackle the tough stuff, laugh a little, and find ourselves on the path to positive change. So what are you waiting for? Season 2 of Timeline will be loaded. Let's get started. Hop in, and let's drive straight into the heart of issues shaping our world. Let's go. Oh, one more thing. Hit that subscribe button and let's take this ride together.
Every day, amazing stories of hope and tenacity unfold across the globe. On Hued Hour, we dive into these inspiring tales and discuss the vital work being done in the humanitarian and development space. Humanity has never faced a shortage of challenges, yet we rise stronger through teamwork and determination. Though these remedies are often underreported, on Hued Hour, we advocate sustainable solutions. We bring you the latest and most impactful news on how lives are being changed. We engage with young change makers and experts who provide valuable insights into relief efforts and the challenges faced by local communities through a global perspective. Join us every Wednesday by 8 a.m. on Hued Network's YouTube channel as we embark on this journey of positive change. Welcome back. We're still here on Tangling Fintech. All right, let's start off from where we stopped. You were talking about how cryptocurrency is different, or is it part of it? Can you broaden that? And also, generally speaking, are there as much as you can, what variations of fintech exist? I think maybe in the mind of the average viewer, what they have in mind is they are not the traditional banks, they are just those other banks we use. But I understand that there are also apps that help you save money
Yeah.
There are apps that help you invest.
Yeah.
So, what else can you tell us about that? And also the differentiation between cryptocurrency.
Okay. So, like we said earlier, fintech is basically just financial technology, taking finances from the traditional means to a digital method of applying them. So everything you think you can do with finance traditionally, once you move it to the digital space, it becomes financial technology. So, for example,
and it's possible for everything.
Yeah, it's possible for everything.
There are not
Everything
some
you do
things
with
that are
finance.
still quote unquote sacred and kept for just traditional banks.
No, everything you can do.
Okay, go
with
ahead.
finance.
Let's hear your examples.
All right. So, certain things that traditional banks do: save money, send money, receive money, investments. What else? Primarily this. Everything on this list can be done on the digital space in fintech. So that's why you have apps that can lend money. You have apps that can save money. You have apps that can send money. You have apps that you can use to buy insurance. You have apps that you could, let's say, you remember when people want to travel abroad and they're asking them for financial statements?
Yeah.
There are apps now that can just pick up all your transactions for a whole year and turn it into a statement you can send for travel.
And it will be accepted.
And it will be accepted. So the whole lump sum, let's say, for example, now you do not have, let's say you need 2 million naira to travel as a minimum bank balance, and you do not currently have 2 million naira in your bank account. There are banking services that can compress all your transactions within a whole year, which might even exceed that 2 million, and give it to you as a statement. It's absolutely legal. And you can present it as a proof of funds. So everything you could do with finance physically, it's possible to do it with financial technology.
Oh, so the future is here.
Yeah.
So the other question was about cryptocurrency and
okay.
difference.
So cryptocurrency is a subset of financial technology. But its methods are different in the sense that it's decentralized. So there's no regulatory body watching over it, ensuring that things are done in a particular way. Though there is structure, but there is no one individual that sits down to say this must be done like this, this must be done like this. All right. So cryptocurrency works off a technology called blockchain. So blockchain basically is a decentralized kind of system where you have different people or different nodes, and those nodes are verifying transactions. So once a crypto transaction has been recorded down, it cannot be changed, it cannot be deleted, it cannot be removed. That's why it's usually advised when people are transferring money through crypto that they ensure that they get the wallet address correctly. Because one mistake, you cannot recover that money.
It just disappears.
It just disappears.
It's gone.
It is gone. So, but if the wallet address you use belongs to somebody, that person will receive it, because let's say, you remember how in school back then where you have like attendance going around. So the first person that starts is right number one, writes his name, and then the list just goes round and round and round. You cannot delete the number one person's name. All right. So, and when that list comes back to the lecturer takes it off and goes. So anybody's name who is not on that list did not attend that class. So the way cryptocurrency and the blockchain works is like there is something called a ledger. So every transaction passes through that ledger and is recorded. So once it's recorded and it is confirmed, everybody on the node gets that update. So nobody can change it, nobody can update it. All right. So if the money is sent to a wrong address, that money is gone. So the difference now, the primary difference between blockchain, cryptocurrency, and the regular transactions or regular financial systems we know is that for blockchain, there is no one middle person overseeing the whole thing and ensuring that things are done the way they want it to be done, compared to regulatory bodies in our regular financial technologies.
Yes, fair enough. I think maybe the crypto bros will get that a little bit more. But I guess the next question I'll ask is, you've talked about regulations that different bodies across the world have. The question is there any chance of falling victim to a fintech app in terms of if it is become available, let's say on an app store or wherever, does it mean for sure it has passed through all the regulations? Or has there ever been, or is there a possibility that, an app can sneak around, get there, and then people send their money and then they start encountering problems, only to find out that this was never a registered or recognized thing by the regulators? Is that a worry that's valid?
Yeah, it's valid and it's absolutely possible. Now, reason being that these app stores do not discriminate. So, if I build an app, for example, with the sole intent of deceiving people, all right, and I build it well, because even the app stores have their own criteria and regulations for your app to be on their app store. So I build it to their specification and then I put it up there. It is possible for people to fall victim to that. The worst the app store could do is bring down my app. All right. But then if people have lost money and they cannot trace me down, they have lost money. So it's important to ensure that whatever services you're registering for, whatever financial services you're registering for, you have done your background check.
That is on the part of the potential customer.
Yes, you have done your background check, because there's a popular saying now that if you shake or any SME, 3 of SMEs in Nigeria, you'll find like 10 fintechs out of 12. All right, so fintechs are coming up. They are like gold mines now for a lot of people, because it's easy to make a lot of money through them because of charges and all of that. So it's important for anybody signing up to any fintech service to vet the service well before signing up for it.
All right, but talking about innovation, has this innovation stalled? Is it getting any better? I ask this because there's this common phrase that has become almost mimified now, which is banking the unbanked. And people feel like any fintech, people just pop up and say, you know what? Our goal is we're going to bank the unbanked. We're going to bank the unbanked.
Yeah.
And usually the issue is these statements are being made in third world countries, developing countries. And people are wondering, the farmer in the village still doesn't have an app that he's using. He's still going to keep his money under his bed when he has the chance, to exchange it and all of that. So is there really any innovation helping people who perhaps didn't even have access or had little access to traditional banks? Does it really help that way, or is it just helping people who were already positioned to be able to benefit?
Okay, so for innovation, yes, there is innovation, one. But like we all know, innovation is subject to the level of development available in an area. All right, so there are certain innovations that, let me use your phrase, banking the unbanked, has brought about and has guaranteed has brought about some level of success in banking the unbanked. Innovations like people are now able to get a bank account or get digital financial services by virtue of just having their phone number. Like their phone number is converted to a bank account number. All right, so that is some level of innovation. So you can have people that do not have access to certain kinds of services, certain kinds of technology, but they have a phone number. And with their phone number, they can actually bank and use financial services. All right. So definitely there are places where this level of technology hasn't gotten to yet. All right. But it's just a matter of time.
Speaking about where it could get to, what differences or emerging technologies do you see could disrupt the system or maybe just improve it within the next 5 years?
Okay, within the next 5 years, AI is coming to stay, and there are
AI in fintech.
AI in fintech is a lot, because you can actually prevent a lot of fraud through AI. All right, so you can build an AI system that monitors transactions and can detect fraud. And when you detect fraud, it can quickly shut down the operation, trace down the person. All right, so that is one. Another one is it's possible there's something going on now where it's available in some other countries where you have things like tap to pay. So I want to send money to you and you're in front of me. I just tap my phone on your phone and money goes. All right. So there are a lot of innovations coming out here and there, and they are here to stay.
That's interesting. I have a friend who says he won't be impressed by technology until he gets a phone that doesn't need to be charged. or I remember one time there was this a picture of a food, and basically someone was giving prompts to an AI.
Yeah.
Give me a picture of jollof rice. Add this, add that. Okay, deliver the food to my house. And the AI says, I can't do that. But let's, we watch and we see.
But AI is actually improving now. But like a lot of people are actually scared of AI because they don't fully understand it yet. But I believe we can get to the point where you can just tell AI, let's say you're using Alexa, for example, Alexa, transfer 50,000 from my account to Amadem's account, and it's AI just transfers the money.
Is the risk people are worried about that? What if someone else says transfer to another account?
So the beautiful thing about it is that there's a lot that goes down behind the scenes to ensure that the AI recognizes your voice. All right. So already we have things like facial unlock, where AI can recognize your face and unlock your screen. So there are things that are put in place to ensure that AI can also recognize voice, and that is already in play. Like you have an iPhone, you can speak to Siri, and Siri will recognize you, but Siri will not recognize me. You understand? So it's something that has come to stay. So with time, I believe that it can also be implemented in finance as well, so that people can have easier access to these services.
All right. Do you see traditional banks wanting to have their own stake or their own?
Yeah, they already are.
So you mean with the apps we're talking about, or
yeah? So some traditional banks now are already shipping out fintech apps. For example, Wema Bank has Alert, completely different, a fintech product, completely different from the traditional bank, but it's still in a way kind of connected, because at the end of the day, you get a Wema Bank account. GTB has one other service called Squad. So banks are coming to the realization that, okay, this is a place where, one, they can make some extra money. Two, they can actually increase their user base as well. Because
sorry to cut you short. One quick question now is, you're a developer.
Yeah.
What goes into the back end? Because a lot of us are just users and we're seeing the final product.
Okay.
What does it take to get from what you do behind the scenes to what we're seeing in our phones, our equipment and all of that?
Okay, so I will do my best to keep it as simple as I possibly can. So I'm not going to go very deep. All right. So I'm just going to, on the surface level, we'll look at things that almost everybody's familiar with. We have front-end developers and back-end developers. So there are other developers behind the scene, but these are the two that I will just dwell on for now, just to make this as short and understandable as possible. So the front-end developers are the people that build what you see in the app. So you have
the things we touch.
The things you touch. So there's another set of people called user experience engineers. So those ones, they design those interfaces and experiences. What happens when you push a button? That is called user experience. What does the button look like? That is called user design, user interface. All right. So after they've done all of that design, they should give those designs to the front-end developers. The front-end developers now write the code that implements those designs. So the back-end developers now are the ones that now build what we talked about earlier, APIs. So the back-end developer is in between the server and the traditional banks. And then they now create endpoints. Endpoints are like the links where APIs connect to that the front-end users can consume. So consuming an endpoint technically means you're just hitting that link. All right. So when they create these endpoints, the front-end users build the interface and connect to the endpoint, consume the endpoints created by the back-end developers. And then the back-end developers give these services, get the services from the traditional banks or from their database. So putting all of this together now, the front-end developers, after they are done, can now bundle their code base into different versions of the app for different devices. So by the time you log into, download the app on your phone, all right, the back end also is also shipped to a server that the front end app connects to. So by the time you have this on your phone now and you're trying to log in, what happens behind the scene is that when you try to log in, a request is sent to the server. So the server picks up that request, validates the request. If the request is valid, it logs you in and gives you a response. So when it gives you a response, the front end gets that response, and then you're now in your app.
All right, fair enough. We'll still have to digest that to really get it. But I love how you broke it down. So finally, before we go now,
Okay.
The question is, when we're talking before the cameras were rolling, and
Yeah.
this is a misconception that people have that I think maybe you can debunk or clear.
Okay.
If it's fintech, there's tech inside, obviously.
Yeah.
And the fear people have with anything tech is that somebody somewhere is going to hack it. Somebody in China who is just pressing his phone and is going to see it and get in and all of that. And personally, I can say that what I've experienced is someone can call me and say, look, we're trying to work on your bank. We just sent you a code.
Yeah.
That's something that requires someone talking. But the one people are afraid of is that one day someone is just going to hack into the account. Is that something that is in the realm of possibility?
Honestly, yes. All right. So the thing
That's
is,
scary.
It's scary, right? But the thing now is that there is nothing that cannot be hacked. All it needs is the intent and the skill to do so. So, for example, you've had situations where you hear things like there was a time that Yahoo had a data breach and a lot of people's emails were compromised and different kind of services. So the best that can happen is the organization can put in different structures to ensure that they can have some level of security. So you have things like OTPs, there's another one called multi-factor authentication. All of these things are put in place from the user side to protect the user's account from the user side. Now also from the company side or the organization side, they also have measures put in place to secure their servers. All right. So if somebody is determined to break into something and the person has the skill to do so, the person can achieve that. Worst case scenario is that the person can be delayed by the level of security that has been placed by this organization. All right. So that is why it's usually advised to beef up your security. And one thing that most organizations do is that they spread their services across multiple places. It's called a microservice architecture. So if one is compromised, the others are not.
Yes. Thank you so much, Mr. Inyang. This has been an enlightening session, and I've learned a lot. Some of it's scary, some of it's hopeful, but it's all been good. Thank you so much for
Thank you very much.
with me.
Thank you for having me.
All right, that's how we round it up today. Key takeaways: as a customer, a potential customer, you do have to do your due diligence. You have to find out before you go all in. On the flip side, the process is more than just sending and receiving money. Basically, we've heard that anything that involves traditional financial services can basically be done in a digital setting. So let's look forward to these developments and work towards them, and also not be left behind. That's what we always say here on Untangle as relates technology. Well, that's how we round it off for today. If you have any concepts, news items, stories, or questions you may have that need untangling, please leave them in the comment section. And next time, we just might be here to do it once again. Bye for now. I am Amadin Ubewe.